In this video, traders, let's explore when to turn a scalp trade into a longer term hold. By longer term, I don't mean years or months. I mean maybe a couple of hours or even a couple of days. Stick around. Hey traders, warm welcome to you. Thank you so much for joining me. All right, so I know a lot of you are scalpers out there. You like to scalp actively on the lower time frames, kind of working orders in and out, or maybe you're aligned with one direction. You're kind of doing multiple trade sequences within one kind of market area or market rhythm. So you might be on the 1 minute chart. A lot of people scalp on the 1 minute chart, so that might be your kind of operating area. And let's say you are kind of trading off this key level, right? You're scalping off this key level, you're kind of buying, you're selling out for a few ticks profit, then it comes back, and maybe you're buying again, maybe you're buying a flush, maybe you get one wrong, but you're trying to jobbing this around, and you're just sort of playing this oscillation off this level. At one point you'll know it'll break, that's why you're disciplined, and you cut your loss if it does that. But the other thing is, well, how do you know when to kind of hold a trade, right? You're there to scalp, you're there to take 10 pips, 15 pips, 5 pips, 3 ticks, whatever it may be. But you kind of go, right, hey, listen, I know that sometimes the market goes off in a direction on its own and I'm not involved in it because I've taken the profit quickly. So one sort of filter, if you like, or check mark or checklist is to look at the higher time frame. I like to look at that higher time frame and say, hey, listen, if that higher time frame has something that looks quite interesting, I might then consider trying to get on a scalper's entry and hold it for a higher move, a higher time frame move. So what does that mean? So if you're there scalping away, you should, before you start the scalping process, have one eye on that higher time frame and say, hey, I know that is likely, and again, you don't know these things, I think that is likely to resolve to the upside today. Okay, so maybe this is an example of what chart you might look at. So you've got kind of this thing here, it's pulled back, it's found some support, it's kind of popped back through the level, and maybe you expect it to go back to highs, but that could be 4 or 5 days before it does that. But you think, hey, you know what, we've exhibited some kind of turning price action. I actually assume and expect that the price is going to kind of put in one of these solid candles or at least a bullish candle. And so if during the trading day, let's say at the open it's drifted down and done this, if your higher time frame thesis is that you're potentially expecting this bullish candle, then you're expecting the day to close up here if you're right. And again, you're not doing this if it doesn't line up. If that's a nothing chart, you forget about it. You don't look to hold it at all. You go, right, doesn't matter what that chart says, I'm just going to scalp this out. But if the higher time frame chart lines up, you can then say, right, actually, what I'm going to do is I'm always going to hold a little bit. And so what you do is you say, you're not trying to swing for the fences because you're not turning yourself into a day trader, you're turning yourself into a swing trader. You're still sticking with the scalper's mentality and the scalper's approach. But what you're effectively saying is, okay, listen, I will always keep a little bit and I will come out if it comes back and pings me out and break even. But what it does do is it means that if I do get, so example here, you buy here, you kind of close out, you can choose what proportion you use, right? But let's say you do half for argument's sake. You close out half, you bring half to break even, bang, you're out. Come again, you maybe get another trade at this, you do half break even, bang, you're out. Back in on this trade as it scoops back up here, you take off half, all of a sudden you've now got half left. And that's lining up with this because that's what we're looking for. The only time you've got to even consider holding it is if it could resolve itself in the direction that you want on the daily chart. Brilliant. So now you have a half position. Yes, you've been stopped out on all these at break even, but you've got to make sure you manage those because you've got to keep some, obviously, to have that runner. Then as it starts to go, that's when you go, right, break even, leave it. And you might say, hey, I'm going to come back at the end of the day and just see maybe 5 minutes before the close and see where we are. And the expectation, of course, on the daily chart is that you're trading kind of up at the highs. If you're not, you've got your break even stop there. But how good is it that you've got this really tight risk reward structure on this trade? And even that could be 10 to 1 more just for day one. And you can even go a bit more aggressive and say, hey, I'm going to hold this for a day 2 play, day 3 follow through, if you believe that the chart pattern on the daily is this. I mean, ultimately, this is the perfect scenario here. You would think the market's going to test that on the daily. It's put a strong move in. You've got all the attributes there above the moving average, whatever it may be, stagnated, faked out, started to rip back up. Great. You happen to be scalping because that's what you are, a scalper. You've happened to keep half the position on. Didn't work out the first few times, fine. But then it did work out. Great. great. You took your scalp off because you didn't know where it's going to go at that point. Now you've got this half position. You're in a beautiful position. You've worked yourself into a day trader's exit, or day trader's target, or swing trader's target with a scalper's entry. That's a really nice position to be in. The risk reward ratio on that can be very high. Now, does this happen all the time? No, of course it doesn't. And do you want to be focused on that? No, all the time? I don't think you do. I think you want to fine tune your craft of scalping, which is getting good at kind of watching those little nuances, the little tape movements, the exhaustion flushes, all this type of stuff. But if you do get a scenario where the daily chart is lining up with something, you can go, you know what? That looks good. That looks good. If I was a swing trader, I'd take that. Well, you can almost leverage yourself into a position of power by taking that on a kind of intraday chart, 1 minute, whatever you're trading on. Always keeping a bit. Okay, the downside is obvious that you don't get the full juice on every scalp you take. But if you catch one of these runners with the sort of scalper stop you've got, the reward's massive. The risk reward is huge. Does it always happen? No, it doesn't. But that's some of the criteria I like to look at when I'm turning a scalp trader or a day trader either into a trade to hold, is that higher time frame, putting it through that filter and saying, hey, is there something there that could resolve in the direction that I'm trading in? If there is, I've got to look to hold something. I want to see if I can try and get on that move. Take care, keep your risk managed. Bye bye.